everyone, I'm Roger Herring. I am the founder and CEO of Investors Accounting LLC, and I am the Investors Accountant. Hey, welcome to my home office. Today we are going to talk about the ultimate depreciation strategy. You know, I have said before in videos that depreciation is the king of all deductions. Well, guess what? There is a king among kings, and it's called cost segregation. Well, what the heck is that? It's a way of speeding up depreciation on rental properties, whether it's single family, short-term rental, or commercial. On a single family, normally you depreciate the property over 27 and a half years. Using cost segregation, we can take the shorter life period components and separate them from the building, and we can shorten their lives to 3, 5, 7, and 15 years. And thanks to this thing called 100% bonus depreciation, we can write the whole thing off in 1 year. Let me give you a little quick example of how cost segregation works for my clients. So let's go to the board. Here we are, and let's imagine that we buy a rental property. And let's just say we bought a short-term rental. So we're going to say STR. Here's your house. Here's your door. And let's say that we spent $500,000, not including the land, because land is not depreciable. Okay, so we're going to have a cost segregation study done. And these are not expensive. They're right around $700, less than that if you're my clients and use my people. So $500,000 is the value. How do we estimate what cost seg is? Well, we're going to estimate using 20%. You know, I've seen it come in more. I've seen it come in less. I've seen it come in a lot more. And I've seen it come in a lot less. What matters is that you have the study done and we can make a solid determination. Every piece of property is going to be different. But here, if I am going with $500,000 at 20%, that's a $100,000 write-off. Some people get confused and think this is a credit. It is not. It is a write-off. And whatever your tax rate is, let's just say you're in the top tax bracket of 37%. The actual tax that associates with is going to save you is $37,000. Could you do something with $37,000? We're going to get this up front. It's a short-term rental. You know what the recovery period is? 39 years. Would you rather claim it over 39 years or would you rather claim it right now? The choice is yours. Now, let's go away from the board and I'll tell you a few other things. To use cost segregation, guys, you need to be a real estate pro or using something called the short-term rental loophole, okay? Or have passive income. The thing is, you got to be in one of those three categories. Otherwise, all you can do is bring your rental income to zero, which is not a bad thing. There's a strategy for that, which is covered in another video. In fact, the short-term rental loophole and Real Estate Pro are other videos on my channel. You can check them out. But cost segregation is going to speed up everything. Now, you don't want to cost seg a property that you're going to sell, because if you do, you're going to have to recapture all of that. That $100,000 that we just wrote off is going to become ordinary income. The $37,000 you saved, you're going to wind up paying some or all of it back to the man. Okay? If you're doing a 1031 exchange, consult with your accountant, because once you cost seg the property, not everything may be cost seg eligible. It's a case-by-case basis, and if they tell you that no, if you cost seg, you have to recapture it all at a 1031, find another accountant because they're not up to date. I hope you have enjoyed this short little video teaching you about the ultimate depreciation strategy and how you can win and save a lot of money. Hey everyone, thanks for watching today. If you've made it this far, you're probably hungry for more. So click subscribe and hit that bell, and you won't miss a single piece of content from The Investor's Accountants. And hey, if you'd really like to take a deep dive and schedule a totally free discovery call, scan that QR code and you can set it up with a member of our team. We're glad you're here, and until the next time, Roger out.